boot camp and to have our Saturday training on Zoom. And today we are minding this month of July, we have dedicated it to structuring our business, finance, and accounts, and to ensure that we do the right thing, because there are opportunities out there for business owners. But we discovered that so many business owners don't get to enjoy these opportunities. And the reason being that their accounts are not structured. So this month, we hope and we desire at the end of this month, our accounts will be structured, and we will be able to have a structured account and use it to get a lot of advantages for ourselves and for our business. And in the house this afternoon, I have my Bimbo Oshuchukwu. You're so amazing. And when I teach accounting to some people or bookkeeping, they are so fascinated. Like, how did you learn these things? I told them, even if you don't have any brain in your skull, just meet Bimbo Oshuchukwu. You will know accounting. You will know bookkeeping. And today is the day that God
amazing woman. She has done a lot in the entrepreneurial space, and we are so glad to have her with us. She has trained thousands of entrepreneurs, and I'm not saying this to psych her because that's just the truth. Her name is Abimbola Oshuchukwu. Abimbola Oshuchukwu. She's, people wonder how I get to know so much about business and accounting. I would like to tell you today that I am standing on the shoulder of a great woman who has shown me the way and allow me to learn in simple, easy baby ways. Because accounting can be very complicated, but she has this special grace upon her life that when she teaches you accounting, you will become a guru. So what we are trying to achieve today, that we decide to do this Zoom, is to ensure that at the end of this training today, you effectively know how to manage cash in your business, within your business. We want you, at the end of today, to understand the difference between cash and profit, because turnover is not profit, cash is not profit. So she'll be explaining these things to us. You'll also be able to know the consequence of poor cash flow and how to remedy that. Then you know how to control your costs and keep proper records, and also to ensure that you will learn how to make more profits in your business. So please, if you don't have a writing note or a writing pad or something you can write on, please quickly get it, because your life is about to be shifted for the best. Your business is about to have a turnaround. And I've spoken about my amazing mentor, and I also want to speak about you to my mentor. So these are my tribe. Mrs. Oshuchukwu, these are my tribe. And meet the business owner bootcamp participants, and they are from everywhere all over the world. And these people, they've separated themselves from the rest. They are really, really passionate about doing business right. They are tired of doing it the wrong way. And some are just starting. They want to start right. So we are ready to be taught. I am also here with my writing pad. You can, let me bring it so that you can see it. So I'm not just someone that speaks and doesn't do it. See, so you can see. So I'm here to write, and so that you can, I want my life to be better too. I want my life to be better. So it's time to have a good ride. And for all of you in this Zoom this afternoon, before we go on, I would like you to know that I just wrote a book on entrepreneurship, and definitely it's going to be an asset to you. It's just 5,000 naira. You can pre-order, and Mrs. Bimbo is having the privilege of, he's doing us the honor of writing the foreword. So you are sure that you are getting the right thing. And again, let me just give her the floor. You need to, so the voice of the person you'll be hearing next is that of Mrs. Bimbo Oshuchukwu, the CEO of Valucon Company. And she's also a chartered accountant of decade experience. And also, She's a lecturer at EDC, Lagos Business School. So for them to allow her to lecture people, she's at the top in Nigeria and even in Africa and in the world. So the voice you hear next is that of my mama, my mentor, amazing woman. I am still trusting God to be able to speak like her. She's so soft-spoken. In fact, your heart will just melt, man. All right, thank you. So please, a round of applause for her. So you can have the floor, ma'am.
Doctor, thank you. Thank you so much. Thank you so much, Dr. Yemisi. You are doing a great job. Always very inspired about the great work you're doing in your space, making a difference, making impact. Well done. I want to share with us a short story.
You,
2013. So she has told you my name. So in 2013, EDC sent me to Abuja to facilitate a class of women that were shortlisted for, I think it was Road to Growth program, sponsored by the Cherry Blair Foundation. Yes. So I went to Abuja to train the women. I think, was it 2013 or after
2016,
that? I think
2016.
2016. Because I think I went in 2013 and also went in 2016. In 2013, I met a very wonderful woman. That was Ramatu. She's based in Kaduna. In 2016, I met with Dr. Yemisi. And you see, these were, it was a class of, let's say, about 40 women, thereabout. I'm not sure of the exact number of women, but Dr. Yemisi distinguished herself in the class. And she was so hungry for knowledge. She was very active. After the class, she cornered me. I remember vividly, we had wonderful discussion. And that was not where it ended. From there, I saw her in Lagos at EDC, coming for different programs and, making a huge difference in the entrepreneurial ecosystem. She always makes my heart glad. She brought me to Ilorin twice, took care of me like a king, not queen, like a king, and it has been amazing experience and journey with her. I'm also very excited to be here this evening. I know some of us would have met when I came to Ilorin some years ago. I've come to Ilorin twice. It's a wonderful opportunity to be able to talk with entrepreneurs. This evening, so that I don't keep boring you with my story, I'm going to talk about managing cash flow. I'm going to talk about managing cash flow. In the same way, there are two things every business needs to remain alive. Two things every business needs to remain alive. Every business needs cash and also profit. We call it sustainability. Every business needs cash and profit. Now, these two things that Gbemiga mentioned are very important for every business to remain alive, but one is more important than the other. Which one is that? Who would like to share with us? Which is more important than the other? Apart from Gbemiga, I would like to hear someone else speak. Which out
cash
of
flow. Cash flow.
So, yes. So I'm talking about the oxygen and food. Which one is more important?
Oxygen.
Oxygen. Yeah, Henry,
Yes,
how are
ma'am.
you? Oxygen.
Good evening, ma'am.
Good evening. Good to see you. So oxygen is more important than food. Cash is oxygen to business. Any business that does not have cash is dead. And that is why it's important as entrepreneurs that we master the act of managing our cash flow. Without oxygen, there's no human being. Without cash flow, there's no business. So when we talk about cash flow, what exactly do we mean when we talk about cash flow? Cash flow is that amount of cash you have in your bank account, in your pocket, in the office, that you can spend to buy diesel, to buy fuel in the car, to pay salaries. So cash is very straightforward. There's no gray area. Cash is the amount of money you have to spend. Can you hear me? Every business needs cash flow, and cash flow is the amount of cash that you need to remain in business. You need cash. Now, you see, cash flow is in two different aspects. There's the inflow, there's the outflow. And as a business, you must ensure that your inflow exceeds your outflow. Your inflow exceeds your outflow, because whether you like it or not, every day cash is flowing out. You are paying for diesel, you are repairing the generator, you are paying salaries, you are buying stock, you are making some form of purchases of your items. So cash is flowing out. Now you have the responsibility to ensure that inflow exceeds outflow. Otherwise, you will have a business that is dead. And you don't want a situation whereby you are cash trapped and you don't have cash to run the business. It's important that at every point in time, you understand the cash flow requirements of your business. Now, I want to ask us a question as we move on in managing cash flow. Who can tell me, what is the purpose of a business? Anyone? What is the purpose?
To make profit.
To make profit. Thank you, Dr. Sambo. What I want to give us a different definition of the purpose of the business. The purpose of a business is to create and to keep a customer. The purpose of a business is to create and to keep a customer. You see, this profit that you mentioned, if there is no customer, there is no profit that will be made. If there is no market, there's no value you are adding. So you must understand clearly that the purpose why you, the entrepreneur, started the business is different from the purpose of the business. So the business has its own purpose. The entrepreneur has his own purpose. So the entrepreneur starts the business to make money, starts the business to add value, start the business to meet needs. But the first thing, the purpose of a business is to create and to keep customers. So you can see here that it is the double-barreled definition, in the sense that you are creating customers continuously and you are retaining customers. You want a system in place where customers come back to do business with you, because when you create customers, naturally some customers will die. Dying means that they will leave. When I say that, it means that they will leave. They might relocate, they might age. So there are different reasons why customers will no longer come. So you must continuously have a funnel where customers are created and also customers are retained in the business. Now, when you have that kind of situation, you have a clear understanding of the purpose of the business. You also see that there are many functional areas a business has, but there are three key functional areas every business must get right. Number one functional area is your operations, the engine room of your business. You must get the engine room right, because it is the one that produces the goods and the services that you are promising your customers. So you must get the engine room right. That is very important. The second key functional area that you must get right in your business is your sales and marketing. No matter how good your product or services are, if your customers do not know about it, they can't buy. So you must have a proper channel that ensures that your target market know that you exist and also can experience your product, whether it is service or a good or a product that is tangible that you are selling. You must ensure that there's sales and marketing is properly put in place. Then the third key functional area is your accounting and finance. Accounting and finance. Accounting and finance is the area that I'm going to dwell upon today. As a business, you must understand your numbers. You must understand the cost. You must understand your revenue. You must understand cash flow for the business. So it's so important that as an entrepreneur, as a business manager, you clearly understand that. Now, if I ask us here what business you do, each of us will be able to tell me what you do. So there's a difference between your technical competence and your business management skill. That exactly is what Dr. Yemisi is trying to ensure you have. So she's not teaching you how to bake bread. That is your technical competence. She's not teaching you how to manufacture shoes. That is your technical competence. But when it comes to business management, as a professional, you are also wearing additional caps, not just as a technical person, but also as a manager and an entrepreneur. So you need to understand what it takes to run a successful business. Now, one of the key things you must get right is managing your cash flow. Accounting is very wide, and I know that from what I heard, she has taken you on a lot of things in accounting, and I'm very happy to hear about that. So managing your cash flow is ensuring that your business never runs out of oxygen, ensuring your business never runs out of oxygen. And this is very critical by understanding where exactly is cash coming from and cash going out to. Now, I'm going to tell us something that is very important. Every business is funded by two major sources. Every business is funded by two primary sources. Number one, we call it equity. The equity investment of the owner or the owners of the business. That is the amount of money that you, as the entrepreneur, invested. And sometimes it might not be in form of cash. When we talk about managing cash flow, we need to understand where cash is coming from and where it is going to. So first of all, we have what we call equity. The equity investment represents the money that you, the entrepreneur, have put in to commence or start the business. Then we also have what we call debt funding. Debt funding. What we mean by debt is the amount of money you borrow or loan. This debt is also referred to as the liability of the business, So I have told us that every business is funded by two primary ways, debt and or equity. So when I say and or, it is not compulsory for you to borrow. It's not compulsory for you to have debt. It is also not compulsory that you have equity. And you can also have a hybrid, a combination of the two. Let me share with you a very interesting story. During my youth service year, I decided that at the end of the youth service year, I was going to start my pure water factory. Dream big, very dream big, audacious goal. I will start my pure water factory. So when I started my youth service, I started saving money, putting money aside in order to start my factory after that. From my very big NYSC Alawi, I was saving and also earning from where I was employed. At the end of my service year, I was able to save 100,000 naira to start a factory. Is that not audacious? So when I found out that I couldn't start a factory, I decided I had to borrow some money from a friend. I called up my friend and I said, look, I need to support me. I want to start a business. I can't start a factory now, but I will start this pure water business. So my friend, Shade, borrowed me 50,000 naira. So I had a total of 150,000 naira to start my pure water business. I decided that when I understand the market, I can scale up to start the factory. Now, I have funded this business by two primary ways. The 100,000 naira I saved during my service year that I have invested in it is my equity. That is called equity. The 50,000 naira I borrowed from Shade, my friend, they represent debt. So the business has a total of 150,000 naira to buy stock, to do all it needs to start off. So you see that I have funded my business. So as the business starts to grow, I start making profit. I can decide to reinvest all my profit into the business, to start to reinvest all my profit into the business, and that keeps growing the business. So I'm able to pay back based on the time frame we have agreed upon. Now, businesses can start with equity and can start with debt. The best type of starting, depending on also the type of business, is what we call customers advance payment. Customers advance payment. Customer advance payment is that customers start to tell you to pre-order. Dr. Yemisi's book is available on pre-order now. She has collecting customers' money. They've not collected it, they've not received the item, but it is a wonderful strategy to increase cash in your business. Now, builders, developers, real estate people, they leverage on this. They will come to you with a sheet of paper. They will say, buy off plan, buy off plan. So with a sheet of paper, you just pay them money and say that once they start building, the prices would appreciate. So take a strategic position to buy off plan. And it is pre-order also. Today you see Samsung will say pre-order Samsung, so. They also use it to synthesize the market. So a business can actually fund its operations through this very wonderful customer advance payment technique. So you see here that the business is funded by debt or an equity. In fact, I have discussed with a lot of entrepreneurs that started their businesses with customers advance payments. They didn't have any equity to start, and they took the bull by the horn and then did that. That was how one of the greatest companies we have in the world, how they started, Amazon. So what did Amazon do? They built a website and they did not have any single book. They were selling books online. They didn't have any single inventory of book. What did they do? They went to existing bookstores and had a purchase agreement with them. And whenever customers place orders, they will use the customer's money to go and buy the book. And then the customer will pay for delivery. So Amazon had so much cash. They had so much cash. They were doing a lot of volume and they didn't have any inventory. As the business grew, that was when they saw that having too much money can also be a problem. They started also having inventory. Till today, Alibaba does not have a single inventory. They don't sell. They just provide a platform for people to meet. So you can see here that a lot of sellers on Jumia and Konga don't have the inventory themselves. They have access to where you can get them. So as a business owner, you must understand how cash is flowing into your business, the inflow of cash into your business. Now, how does cash flow in? Who can tell me? What are the ways that cash flows into the business? Yes, I want to hear from us.
Products and services.
Thank you. Thank you very much, Akolade. The sales of your product and services. Yes. So the sales of your product and services brings cash into the business. Now, cash comes in from that sale. When you make sales at a profit, profit is also a source of cash flow into the business. Another way that businesses cash flows into the business, we have three primary ways that cash can flow into the business. Apart from, so we talked first of all about financing, where money can come in from the shareholders, that's the entrepreneur, the owners of the business. Money can come in from debt. Then we have money that can come in from the operations, and that is sales, the operations of the business, the day-to-day activities of sales, cash flows from customers paying for goods and or services. That is an inflow. Another inflow can come in from investing activities. Probably there's a particular car that the business has and has been using, and you've gotten to a stage whereby the car, the value has fully depreciated. You decided to sell it. The proceeds also can provide cash flow to the business. So that's very important. Now, who can tell me what are the ways cash flows out of the business? Yes, outflow. Yes.
Assets and liabilities.
Okay, outflow. Yes. So thank you. So your business cash is flowing out when you spend money on salaries, when you buy fuel for the car, when you pay for diesel, when you pay utility bills to buy data. Cash is going out of the business. So we see inflow and we see outflow. So there's an inflow, outflow. So when we understand how this happens, some of the ways we can ensure that we are managing our cash flow is to ensure that there's more money coming in than is going out. So I want us to look at, we've discussed inflow of cash and we've discussed outflow of cash. I also told us that profit and cash are the two most important things every business must have to remain alive. Who can tell me what exactly is the difference? You can try, if there's any. Is there any difference between cash and profit? Anybody?
Okay, all right. According to what you explained to us by ways of funding businesses, I can say cash, the equity, the debt, the customer advance payments that is available for us to operate the business. And then profit is the proceed that you get from the cash that you already used in operating the business.
Thank you. Thank you very much. The proceed. Okay, so I want to give us an example. I start a business selling handbags. I'm selling handbags. So Kehinde buys 5 handbags for me. Each handbag costs me 10,000 naira. And I sell each handbag for 15,000 naira. So on each handbag, I'm making a profit of how much? Yes, I want to hear from us. How much am I making from each handbag? I buy it for 10,000, I sell for 15. How much am I making on each handbag?
5,000.
5,000. 5,000. Thank you. So if I'm making 5 handbags to Kehinde, how much is my profit on the 5 bags that I have delivered to Kehinde? Okay, I think we can do raising of hand. Yes, someone is talking. Yes, Shola?
25,000.
Yes, sorry? 25.
20.
Thank you, Shola. 25. 25,000 is my profit, correct? That's my profit on the sale of the 5 handbags I sold to Kehinde. They only paid me for 3 bags. How much cash do I have? Kehinde, you are the one that paid me. Yes. How much cash? Yes. Ijoma, how much? How much do I have? God bless you. Thank you. So you can see that cash, thank you, Ijoma. I have 45,000. That's cash. The amount of cash I have that I will use to go to the market to buy new stock of bags. But the profit is the difference between the total sales value and the cost. The profit is the difference. You know, I have delivered 5 bags to Kehinde, and because I have, or if I render services, I have done the job. I have sent an invoice. Profit is the difference between the sales value minus the cost. Whether the customer has paid or not, as long as I have delivered the bags to Ijoma, I have sold. So when we are recognizing profit, we are recognizing based on the sales that was made. Now look at this scenario. If Kehinde paid me for 3 bags and I have not delivered, then I have not sold. So I have not made profit. I can't say I have made profit. When I have not delivered, she paid me and I said, I don't have bags now until next month. The money that Kehinde has paid me is referred to as unearned income. It's a debt I'm owing Kehinde until I deliver on the items that Kehinde has paid for, until I deliver on the items that Kehinde has paid for. So it's seen as unearned income. So in order to ensure that I'm managing my cash flow very well, I have to start with the cash inflow. I have to start with the cash inflow. Now, number 1, I must make sure I issue out invoices timely. I issue out invoices timely. The invoices for job done, they must go out timely. Again, you can have an arrangement whereby a percentage of the invoice, especially for those of us that render services, a percentage of the invoice can be paid as an advance payment. People pay in advance for a lot of things. When you are buying an airline ticket, you pay in advance. So you see, you can have an arrangement where people can pay in advance. If you run a dry cleaning outfit, for example, when you drop the outfit, they'll say you can also put some cash down. So you see here that payment can come in advance, especially for those of us that render service. If after you have rendered the service, the customer refuses to pay, you are in a very bad situation. So it's important to have a policy in place where you ensure that there's a commitment on the part of the customer, especially for those of us that render services. So you ensure that inflow, you cash inflow, there's an invoice. You have to prepare an invoice that tells the customer how much he or she is owing you. Ensure that you prepare them promptly and they go out on time. Again, make sure you collect some form of advance payment from these customers. It's very, very important. Again, it's also good when you are managing your inflow, when you are ensuring that inflow is coming. Customers have an easy way of paying. It makes it easy, make it easy for them to pay. Have various channels through which they can pay. In this day and age now, they can transfer, you can do POS they can pay cash. Checks are going out of circulation like before, so you make it easier for them to pay. Now, also for customers that are owing you, chase them for debt. Chase them. You have a timeline you have agreed. Please chase them for debt. You see, if you can avoid customers owing you, that's the best. If you can avoid it, that's the best. If you can't, you have to manage your customer relationship. You have to ensure that you manage it so that cash flow is constantly coming into the business. Cash flow. Another way to increase cash inflow is to sell more. To sell more, you have to look at ways you can be innovative to ensure that you are selling more, and also you are selling more profitably. You are selling more. So if you are selling more, it will help increase your cash inflow. If you are selling more, if you are creating more visibility for your brand and your image, you are helping. You are going to increase your sales. One thing that we must look when we look around is to observe how successful companies are doing over the years. How successful companies, how are they doing? A lot of successful companies have evolved over the years to sell more, Let's take a look at Cadbury. Look at Milo. When they were selling Milo before, it was only in tins that they were selling. They started selling in sachets. They started selling in smaller sachets, all to increase their market share. Now, apart from that, I saw, look at DSTV. What did DSTV do? They created a smaller product, Go TV. They had a smaller end for the lower end market. Same company, different content to ensure that there's a market at that low end. So they provided a product that can meet that end. So you look at your business and look at how can we sell more? How can we, what can we do to sell more? Irrespective of what business you are doing, you can increase your revenue or cash inflow by selling more. Now, these are strategic ways you look at it and see how you can increase selling more. Let's look at the telco companies, for example. I'm sorry I'm using big companies. I'm using them because we can learn from their success story. And I believe that our small companies today have that potential to be the big companies of tomorrow. Nothing is impossible once we set our minds to it. Now, look at MTN, look at Glo, look at Airtel. When they started, when they came newly into Nigeria, what were they selling? Airtime. They were selling recharge card and SIM line. They were selling the SIM and recharge. Over the years, they have evolved to selling data. Now they sell music. They sell insurance. All you on your phone, you can subscribe for a particular music. You can buy music. Now, look what is happening to the musicians. The musicians are selling on different platforms. It's not only releasing the record. What else are they doing? They are also selling. Whoever buys the music from them, maybe an MTN, will pay. What else do the musicians do? They are brand ambassadors, so they will collect money just to smile in front of a camera. Yeah. So you see here that one of the most important ways you look at how can you increase sales, even though you are a musician, whether you are baking cake, you look at ways you can constantly improve your revenue generation. Another thing that you need in managing your cost cash flow is managing your outflow. For example, you look at your outflow. What are the things that make up your outflow? Look at your suppliers. Can you have a discussion with them to have some form of structured credit period before you pay to them? Structured credit period whereby, okay, you can pay at so time. Very, very important. Look at your cost component. Be efficient and avoid waste. Make sure you are financially disciplined. Avoid waste and watch your cost. In this COVID-19 period, inflation rate has gone off the roof. So you don't have there's no room for what cannot happen. Look at Lifeforth Hospital. Lifeforth Hospital, as a result of the COVID-19 pandemic, started telemedicine. That is a major innovation, and I patronize them for telemedicine because there are people that have no business going to the hospital at all. And with webinars like Zoom and platforms like WhatsApp, a lot can actually be achieved instead of the hospital being clogged with so many people that shouldn't be there. Yes, the doctor can actually administer some medication based on what the complaint that you have complained to them. So you look at how they've launched and evolved gradually a new income stream. And you see, the only thing that can limit us is our mind. As long as we keep thinking, you keep evolving. And now, see, Dr. Yemisi now has written a book. That is also another revenue stream. It's another way of making money to create visibility for her, for her brand, for the hospital. And you see, people will keep the book will reach Germany, it will go to South Africa, all over the world, where she will never ever be able to step her foot on. The book will reach there, making an impact, making a difference. So you see here that there are different revenue streams. Now, when you are managing, no matter how much you sell and increase your revenue stream, you must be cost conscious. You must manage your cost, because if you are just selling, and your costs are more than your sales, you will not make a profit. The business will be making a loss. So you need to watch your cost. You must be mindful of your cost. It's very, very important. No matter how well you are selling, you need to be mindful of cost, the cost you are incurring. There has to be a cost consciousness in your organization, starting with you in your business. Members of staff must understand cost consciousness. And it's not that you are going to cut costs in such a way that will compromise the value you have promised your customers. No, you are being efficient and effective in the choices and how you are carrying out your daily activities. So when you ensure that is done, you are managing your cost very well, you'll be more profitable. You will be able to run a profitable business, and you have more cash. So you see there that it's important to manage, to ensure that the inflow is constantly coming in, and you are managing the cost end of your business. That is very important. As a business owner and entrepreneur, you must have an accounting software. So I've talked about inflows and outflows. I want to talk about records. I want to talk about keeping proper records for your business. I know Dr. MC has done a lot of justice to this. I just want to add that you must have proper records. And even on your phone, you can have a free accounting software. There's one called Wave. You can issue invoices for every transaction. You can issue receipts for every money that you have received. It is very, very important that you ensure you are putting down documents. When you buy things from your suppliers, also collect as much as possible. I know it might not be possible 100% of the time, but as much as possible, collect evidences that we will use as this is what I bought at so date. This helps your business because you are building an institution. It's not just about an individual. And you see, greatness does not come by chance. It comes by choice. The choices we make, the seriousness we attach to the respective decisions that we make makes a huge difference. And you see, success will not come and drop on our laps like that. We have to earn it. And when we earn it, we will spend our money in such a way that it will keep growing the business. It will keep growing the business to ensure that the business will. Now, you see, if you do not keep proper records, it will be difficult for any accountant to help you in preparing your records. So you must understand that. So profit is only on paper, while cash is what you can spend, what you can use to pay salaries, what you can use to repair, what you can use to buy data on the phone. Now, it's also important that there are consequences for poor cash flow management, especially when you are buying equipment. Be careful. You don't want to be stranded where you have bought equipment and you are unable to pay for the consumables or the materials to run equipment. So some of the ways you can finance your business is also to get some form of lease payment. You can pay for some equipment over a period of time. It might sometimes be higher than the cost of buying outrightly, but if you know you don't have adequate cash, you can also pay for some items over a period of time. And it will be a win-win for the business and also for yourself. So the business has a new equipment that it can use to take the business to the next level. During this COVID-19, the Central Bank of Nigeria launched the 50 billion COVID-19 fund, and people have started accessing it. So if you also apply for this 50 billion, it's also a way of getting funding into your business. That is called debt, because you have to pay back the money, and then you have to control your costs. How do you control your costs? Costs are in two major categories. The first category of cost is called the direct cost. The direct cost, or in the second, we call the fixed cost. Now, the direct cost is directly related to the revenue you are generating. Is directly related to the revenue you are generating. So you cannot run away from it. For example, the bags that I sell, the cost of the bags are direct cost for me. They are directly related to my revenue. Because if I sold 3 bags, it's the cost of 3 bags that I will deduct. Secondly, we have overheads. Overheads are indirect costs. Whether you sell, you don't sell, you are incurring the cost. So as an SME, please keep your overheads very low. Keep your overheads very low. Don't employ too many staff that you do not need. Some staff can be in a pool. Whenever you need their services, you engage them. So you are managing your cost. You are not having an over-bloated payroll that is wiping out all your margins. So to manage your cost, the first step is to look at the breakdown of what exactly you are spending money on. Secondly, you now look at where are the areas that you can bring down this cost, what alternatives, what options are there that you can consider when you are trying to control your cost, and you look at the impact of this cost on the overall revenue. And sometimes when you have a full breakdown and understanding of your cost, it helps you to know where you can cut and where you can optimize. That is very, very important. Now let's talk about keeping your records properly. Every business, I've told us about having a good software, but if you cannot start with a software, start with having invoices and receipts. Ensure that you fill it 100% of the time, not once in a while, or as the customer asks for it. 100% of the time, you issue out invoices or receipts. The difference between an invoice and a receipt is that a receipt is an acknowledgement of the amount you are receiving, while an invoice is an advice to the customer of how much he or she is owing your business. So ensure you do that. Secondly, in proper bookkeeping, you need to open an account in the name of the business. Open an account. If the business name is not registered, please register it. Now, open an account in the bank of your choice and make sure that you use your bank for all your day-to-day transactions. Use your bank for your day-to-day transactions. Very, very important that you use the bank account for your day-to-day transaction. The bank is part of your bookkeeping system. Your bank account is part of your bookkeeping system. If you ensure that all your monies go to the bank, when you need money, you also withdraw from the bank. You know, during a period, you can actually ascertain how much cash came in just from your bank statement. If you are ensuring you are disciplined enough to ensure that all goes to the bank, it's in your best interest, so as to ensure that your capacity at every point in time, you can increase your outlets and you can grow the business beyond yourself. You can grow the business beyond yourself. So we can see here that profit is very important, but cash is much more important in a business. I've been talking since. I want to hear from us. What are the questions we have based on what I have discussed, or what challenges do we have in our business when it comes to managing cash flow? This is a very practical class. What questions do we have? What challenges do we experience in managing cash flow? Anyone?
Thank you so much, Ma, for this beautiful. Take this time to tell us in the house that this is what
ask. Can I go
Please
ahead?
go ahead.
Okay. Do you know what percentage of is it your cash or your profit to separate for, some reasons? Like we've heard that, separate yourself from your business, don't take money from your business for your personal needs, etc. So how do you know what percentage to put in back as for business management, what they call it, put back into the business, and what percentage to should I say pay yourself, or how does that go? That okay, from your business you're paying a certain amount to yourself or something that is your own profit.
Okay, so when we are looking at what to pay yourself, we also look at the earnings, the profit of the business. So for the business to pay you, you look at what stage it is, how well is it making money, to determine how much you would state as a salary for yourself. If the business is still very young and is not yet making adequate money, you have to be careful the amount you set as a salary. The business might not be able to afford to pay you what you are worth at the initial stage. The business might not be able to pay you what you are worth at the initial stage. So what you will do is that when the business is not able to do that for you, you can set some form of salary that can at least help keep you going. So you open a savings or a current account in the name of the business, open an account in your name, transfer your salary to your own account, pay yourself. Let there be a distinction between your finance and that of the business. So transfer your money. It can even be fortnightly. And you know that at this stage, the business can only afford to pay me 20,000 naira. If I want to earn a 200,000 naira, the business has to grow to be able to afford that. You are worth 200,000, but at the stage where the business is, the business cannot afford to pay you. I was listening to a radio station of Mr. John Obaro. Mr. John Obaro is the MD of System Spec. System Spec is, I think, the number one software company in Nigeria. They are the ones that own Remita. So he was on a radio station and he said when he resigned from where he was working, he had a personal driver, he had company car, he was living in Ikoyi and all that. When he resigned to start System Spec, he relocated to Agbara. So Lagos State, Agbara is very, very far. In fact, it's Ogun State. He couldn't afford to stay where the company had put him. He had to adjust some things structurally. But today, they have moved back to, I think, VI now, or maybe Ikoyi. System Spec is a very, very successful software company, and they are doing very, very, very well. Now, what am I saying? At the initial stage of the business, it's like a baby that cannot fend for its parents. At that stage, the baby is still looking on to the parents for support. As the baby grows, now as babies grow and start earning, they will start providing for the parents. So at the initial stage of the business, what you look at is how much can the business afford to pay me, not what I am worth. And there is really no specified percentage. You have to look at the earnings of the business. And the reason why you should put the money aside in your own account is that so that you can spend within that. When you see that you don't have enough salary, you will work harder so that the business can earn more money and you can increase your salary. Are you with me? Now, as the business grows, my advice is that don't take out any money as dividend at the initial years of. Keep putting back into the business. Keep reinvesting as at the initial stage. So when it grows, so it's like I sell those my bags now. I make a profit of 25,000. Let's assume Kende pays me everything. I go back to the market, I buy bags again. I started the business with 50,000 naira. Now I have 75,000 naira. I go back to the market again, I buy goods worth 75,000. I would quickly grow the business. Now that's giving that probably, and then at the end of the month, I take some form of salary for myself. So if you look at it from that perspective, that based on what the business can earn, you set a salary for yourself. Then as the business grows, you can review it. The business will go to a stage whereby you can pay yourself, pay other people what you are worth, what you deserve. But at the initial stage or the early years of the business, you need to appraise the earnings of the business to determine what you would earn. I hope that answers your question, Ijoma. I hope that helps. Is it clear?
Yeah, it's clear. So you're saying pay yourself what the business can afford, but mostly put back money into the business to grow it. So
yes.
Or maybe before I would have thought maybe you started with bags worth 50,000, or maybe you even started with customer advance. So you probably don't have bags, but you know who has bags. So you start advertising your friend's bags, and she tells you, "I'll give it to you for 10,000 naira." You start advertising them for 15,000 naira. So people give you 15. Someone gives you 15,000 naira. You transfer 10,000 naira to her. You're saying keep the 5,000, sell another one, keep the 5,000, then buy your first bag from her. That's what you're saying. So there's no point where
you can even.
Should I go on?
Yes, go on.
So I would have thought maybe before I'll say, okay, this can just keep going like this. She keeps having the bags, I keep advertising, and I just keep selling. No need to buy anyone and keep for myself to sell. I just keep linking, like that, and making the money. Then the money I'm making, I probably just keep keeping it in the business account and maybe pay myself. I don't know. In that kind of scenario, what's your advice on how it should go?
So it's a beautiful scenario. A lot of people are making a lot of money. In fact, they still don't go to buy the inventory because you see, when you have the inventory, you are stranded with goods that customers might not even want. you have a stock warehouse of things that customers might even want. But so it actually now depends on you, the entrepreneur, to decide your business model. Your business model, you can make so much money. Like a young guy I was discussing with, that was how he started his honey business. It was in a WhatsApp group that he discusses a lot there. And then one day he went to visit his sister in Osogbo and saw very good honey. But where he was coming from in Abuja, where he stays, he saw that this honey, the price was very different. So he saw a huge opportunity there and advertised that I have honey to sell. He didn't have a single honey. All he knew was where to get the honey. And people started paying. He used their money to buy the honey and then kept the profit he earned. But today, he's big into honey production. So as the business grew, he started looking at other ways of getting the honey cheaper, and then people knew him for honey production. So he decided to start a full-fledged honey business. But you see, when you don't validate your idea, when you just go if he had just gone to go and buy a huge lot of honey, and the customers don't even want honey, there's sugar they want. So you look at the business model to determine how to go. For example, what Alibaba does is to connect people to Chinese suppliers. It doesn't have any inventory. What Amazon did when they started growing, when they evolved, is they started buying companies. So they bought over internet-based companies that had that were aligned to their type of business model, and they were they bought online supermarkets, they bought online stores that sell shoes. So if you buy the bags from your friend that has bags, you make your first profit of 5,000, you need to build capital for the business. Don't take all that 5,000 naira as your money. Don't take it as this is my money. The business itself needs to have money. You are growing an institution. So you at the end of the month, you say, okay, I've been able to make 200,000 this month. The salary I'll put myself on is 50,000 naira. The business needs to have its cash. Opportunity will come where this your friend might say, okay, things can change. So you start looking at opportunities. So when you have cash, when you have money, you can grow the business continuously. I hope that helps, Ijoma.
Yes, that helps because like all my businesses are based on customer advance. So we're attending.
Oh, awesome. That's good. What kind of business do you do?
Homemade meals and the COVID-19 supplies all are based on customer advance. In fact, I think all the businesses I've ever started in my life are based on customer advance.
So customers are the one funding your business.
Before anything happens. But when I was attending Dr. Yemisi's class, so I started saying, okay, so this is, no, I should not just be carrying this money now. So what am I supposed to do with it? So I was just trying to know. And your explanation has, helped with that. It's not money for you to go and buy Cold Stone or buy wine and enjoy yourself. Another thing I was just thinking about now that the money can be used for is better advertising, like to wider.
Yes, you have to grow it. Yeah, now you are talking. Then you can also have an online store. You can grow. You see, when you have money, you can do that. You can also think of having an online, because e-commerce is going to be big business. And you can also look, I'm just thinking out loud. And, all you are doing, you can think about, okay, next 2 to 3 years, what can we do differently? So, but you need to build capital for the business. You need to build capital for the business.
Thank you so much, Ma. There's some question in the chat box that I would like us to address quickly.
Okay.
From
Let me look at the chat box.
It says that is credit sales good for business? And there's another one from Kainde Adebosin that says, how can I put a cost to my creativity stroke intellect while costing my products? That is a dress. I assume she makes, she's in the fashion line. So how can she put the cost to our intellectual contribution to the making of dress? All right. So Mr. Sambo then.
So Dr. Sambo, is credit sales good for business? Between you and I, if you can avoid it, is best. If you can avoid credit sales, is best. In fact, see what Ijeoma's business model is. She is even collecting money in advance from customers. You pay, then she delivers. That's the best model. Now, you have to be careful, because the truth is that once you sell on credit, there's a probability that money might never come back. Now, it also depends on a lot of factors. Number one, if the customer drops dead, that's the worst case scenario. Number two, if the customer has a major issue with their own business and they really want to pay back, they are unable to pay back. So, but some businesses cannot totally avoid credit sales. And for example, in the health,
I wanted to talk about credit sales. It almost sent us out of business. Selling on credit almost sent us out of business. And there was a time like 2 years ago, by the time we did our auditing, we discovered that we had about 6 million naira in debt. No, we are not debtors. We had debtors up to the tune of 6 million naira. And one of them actually wanted to pay us with his car. But we felt that, we should not do that. Lorry is a small place, don't let's collect the car. But we would have probably asked them to write a document to back it up that this is what they want to use, so that if they couldn't get it, but eventually we're so magnanimous and business unwise to allow them to go like that. When everything is fine, come back. And we did not even chase that money. So we did not put cash recovery mechanisms, policies in place. We just assume everybody is nice, everybody will pay back, they will do the right thing. And after like several months, we called them. It was one of the children that called and said, their father died. And that was how the money went down the drain. So we lost 6 million naira to debtors. 6 million naira. It's very heart-wrenching, heartbreaking. If I have 6 million naira, start somewhere now, I know what I can do with it. So we are building the business again, but I've got my hands burnt. And that's why I'm passionate about other business owners, so that they can learn these things, because knowledge saves you from destruction. So please, if you're going to do credit facility, make sure you have a greater energy to chase the debt. If you do not have the ability to chase debt, then don't. Because sometimes it's even time consuming and time wasting to be chased.
It's not sometimes, all the time. The time you will use, the energy, the resources, money you will use to chase the debt, it will now become fight. It will now become bad blood. There will now become issues. But if ab initio, you have told them that we are sorry, we don't do that, customers that really want to do would go and get the money and then come. So you see a lot of time, bad debts, that's debts that go bad. They will not pay back, then you have done. So, but if you had insisted, in fact, I was teaching a class of Coca-Cola distributors, and they are all big dealers in Coca-Cola. And some of them say they don't sell on credit. That's their policy. They don't sell on credit. You want to buy, you buy. You're not buying, you leave it. Then we have some that say they sell on credit. So I realized that it's actually the business entrepreneur that dictates what they want. If customers know that they will get value, they say, okay, we'll buy. So you like Dr. Emisi has said, you must have the time, the resources, the energy, or have a staff that is chasing the debts. I mean, for HMOs, how do you do? You chase them now. You have to chase HMOs to pay for services you have rendered. And there are some HMOs that will never pay. You have rendered the service, they will never pay, and the money is gone. The money is gone. So credit sales is not, if it's avoidable, let's avoid it. If it's avoidable, let's avoid it. But as much as possible, let's encourage customers to pay in advance, not even credit sale. Now, Kende is asking, costing my intellectual service as an educational consultant. Okay, how can I put a cost to my creativity while costing my product, a dress, or costing my intellectual service as an educational consultant? I've been operating both businesses based on passion, but it is racking my bank account. So the costing of your dress and pricing, there are two things. Cost is what you incurred to make the dress, while pricing is what you sell, the amount you sell the dress for, the amount you sell. You see, when you are costing the dress, you need to understand your market. Who are you selling to? What is your value proposition? Sorry, I just want to make sure the lighting is fine. So you need to understand your market, your customers, and so many factors that you need to consider. Your location. Are you selling to the high-end market, middle or lower-end market? Because when you don't understand the market and you put a particular price on an outfit, it's not attracting the kind of customers you want. Some prices, if your selling price is too low, some people will not buy from you. They just feel this is not good enough for us. Some people, the higher the price, that's what they want. And if it is too high, some people won't buy from you. So you need to, when you are doing your costing, there's a perception. We call the buyer's perception. The perception the buyer has of your brand, of what you stand for. And so you build, if you want to sell in the high-end market, you build that brand perception, and your work has to be very good so that they can pay that premium that you call intellectual property. You have to always think about the customer. What's in his mind? What's he thinking about? Why would he buy it at a higher price than what the other person is saying. Also in the educational sector, what's your value proposition? What's your unique offering that your intellectual property is communicating? I once had a school where my son attended, my youngest son, and the school owner was so passionate. When we moved from where we were staying to a different location, I still found ways to still go back there because she made a huge difference in detail in my son's life until I couldn't cope with because of distance. So you need to look at what exactly is your unique value proposition that would make customers always come back. And it's not only about price. You have to be mindful because there are some people that are price conscious. They are not your customers. Some people are value conscious. They want that value. So someone that values jewelry might not value education. They can spend all the money on jewelry, but education, they don't value it. So you need to define your customers' characteristics to understand who exactly are your customers and then put ways to attract these customers. Yes. It's 5:51, Dr. Emisi. Your 5:31, sorry. Your mic. Your mic is muted.
Okay, I just unmute myself. We are very grateful for today's training. Mrs. Bimbo has been training people since morning. And if not for the love she has for us, we would probably have cancelled or postponed. But when we say, Mommy, we need something, she's just ready to always be there. And she's an embodiment of wisdom and godly virtues. I'm sure you really enjoy today's class. And definitely we are going to have other classes and we'll call on you and let you know what it's going to be like. And I want to say thank you so much to you, Ma. I've heard you several times, and I'm not tired of hearing you again and again and again and again. And I enjoy you so much. I have to go and call others, just like that woman by the well side went to the city to call people, come and see Jesus. So, and that's how I've always been calling people to come and see you and hear you. And thank you for being a good role model to us and teaching us right. And always very busy. Thank you for having our time.